All right, so here's our options chain. This is exactly what it looks like, right? So this is Microsoft here. We can see our expiration dates spread across. You can see April 19th, 2024, May 17th, 2024, June 21st, 2024, and July 19th. So these are all expiration dates, and this probably goes back all the way into 2026. But I want you to get a clear vision of what this looks like right now. All right, so we have calls and puts. Our calls are on our left side. Our puts are on our right side, right? And you can see that they're listed pretty blatantly, right? So I'm using this August 16th, 2024, so everybody can clearly see. The bid and the ask, right? Those are going to be right next to the equity price. And right down the middle, you see those strikes. It says strike price. We got 380, 385, 390, all the way down to 420. The bid and the ask are right next to them, right? And next to that is the last. So that's the last number that people bought that trade at or bought that contract at. Another important factor that we look at is the change, that net change. That means that the price has fallen or the price has appreciated on that contract. And I'm going to tell you, when we're looking for valued ones, this is going to be a place where we can find some real good value. I'm going to show you one that I'm looking at right now. I'm going to give it away. A couple that I'm looking at right now, I'm going to give it away. Volume is important as well. That tells me the amount of people that have bought these contracts. And so if you look down at the 420 call, you can see 103 people are inside that call already. 103 people, right? So when I look at value, I'm saying, where is the probability looking at? Where is it at? Well, where's the highest level? Well, 857 is here. So a lot of people are looking at that open interest to say, all right, there's a chance that 420 might be a good number for August 16th of 2024 for Microsoft to get to that point. So these are these little key factors that we watch when we're trying to make a decision of where we should get into an options contract or an options chain. All right, let's move. All right, so why do people do options? Well, first and foremost, trading has considerable risk, right? But the number one reason people are doing it is for growth potential, right? So what does that mean, right? The growth of an option contract is different than the growth of an asset, right? So the trends are vitally important. So if Microsoft, this great company, right, which is trading at $402, if it grows to $422, that's an 5% increase on your investment, which is not bad, right? If I could tell you can make 5% on your money, you take that, right? That your bank is not doing that. Your savings account is not doing that. Some of your mutual funds ain't doing that. But if you can get a 5% return, that's great. However, right, if we had a bid, right, let's say we had a bid price that was $7, and if the asset grows, right, so if that asset, the company's stock price, if it was Microsoft, if it grows to 422, and the bid now changes from $7 to $10.50, now, well, you've almost made 50% on your investment, right? So there's key factors that you have to pay attention to inside of it when you're looking at bid and ask price. Now, this is something that nobody talks about, so I'm explaining this to you right now. And 99% of the time, maybe I'll say 97%. 97% of the time, people will tell you, do not exercise an option contract, right? Do not buy 100 shares. Well, sometimes I disagree, and this is one of those. And so this is a call that I'm actually going to show you something that I'm doing right now. I'm actually involved in this. And so I have 4 NVIDIA contracts at 205. The call is for June 21st of this year. So I bought those probably about 2 years ago. My plan is to exercise one of these contracts. So if NVIDIA is trading at $877 and I have the right to buy shares at 205, think about how much appreciation I've gained on those shares. But here's what happens the moment I buy it. NVIDIA, which is trading now at $877, it'll cost me $87,000 if I bought 100 shares today. Each one of those shares now has equity of $666. So if I get 100 shares, and there's $666 of equity in each. Once I purchase those shares, I now have $66,000 in equity in my account. The biggest benefit is now that rather than having an expiration date on those 100 shares, I keep them in my brokerage account forever. And so the more NVIDIA appreciates, the more my shares appreciate. So this is one of those ways that exercising the contract could be beneficial because it does give you the option to buy at a lower price point. All right, so no cap in my rap. You don't have to do the math. I put it up there for you. This is the actual trade right here, so you can see. So if somebody wants to buy this same contract that cost me $5,000, it is now going to cost them nearly $67,000. I love the game. I love the game. I really love the game. I can't front. I really love the game. But this is part of it. Sometimes you just put your positions in some very, very important companies, and I like to trade. The Magnificent Seven is great. I always talk about TSM, and we'll show you a little bit about that. I always talk about Lilly. There's some really great companies, right? I've learned from early on. I don't have to try to find these companies that are up and coming and hit home runs. Stay with the solid ones and just pick your spots and do it strategically, and make sure you do the research before you do it. All right, so that's the trade. That's 1,200%. Yeah, so y'all can do the math. I still don't got it though. All right, let's do some research now. Y'all ready?